Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, what's coming up on the show today?
Well, we're going to follow up on the last week's Kaiser Watch episode where I predicted there would be a resource estimate from Patriot Battery, and Patriot Battery Metals did not disappoint us. We're going to talk about the surprise financing Solitario did, and I'm going to have a small rant about the new SEDAR Plus ClickAlot system that the Canadian regulators have foisted on the investing public.
What did you think about Patriot Battery Metal's maiden resource estimate?
Jim, I was stunned by what they did deliver. It was an inferred resource of 109.2 million tons of 1.42% lithium oxide at a 0.4% cutoff grade. Now that contains about 3.8 million tons of lithium carbonate, which is roughly what the International Energy Agency predicts will be required annually by 2030 to meet electric vehicle deployment goals as part of their net zero emission target for 2050, which will limit temperature rise to about 1.5 degrees Celsius. It's the size of the resource is also roughly equal to Rio Tinto's Jadar deposit in Serbia, which is now stalled because the government has canceled the license to it. Rio Tinto has said that by 2035 we need 60 Jadars in order to meet the lithium supply requirements by then. So in a sense, although this resource is huge, it's still only a drop in the bucket for what's required. The other interesting thing here is that this resource covers less than a tenth of the 50-kilometer trend of the Corvette property in the James Bay region. So there's room for 3, maybe 4 more such deposits, but even that is a fraction of what the world will require. But the really big significance of this is this validates the idea that the James Bay region of Quebec is a world-class lithium pegmatite district, and the CV5 may not even be the best that ends up being found in this district. Now, the news should have kicked off Lithium Mania 2.0, but it didn't. Why is that? Well, Canadians seem to be in a torpor of inactivity. I just read in the Financial Times today that in the United States, there's about $3.5 trillion parked in money market funds, are earning around 5%, and probably will earn more as Powell continues to raise the interest. People are sitting on the cash. Now, Canadian investors who should be all over this, they blew themselves up with their cannabis bets, with their Bitcoin bets, and of course they've always been historically obsessed with gold, but now people are really kind of unhappy about gold. It's managed to, $2,000 has become the ceiling once again. It's bumbling between $1,900 and $2,000, and the sort of grades that you get for gold projects just aren't comparable to what this is all about. Now, in terms of what this is equivalent to, consider that at the base case price at $10 per pound, the rock value of this maiden resource is $763 per ton. That's about 0.38 ounces per ton gold, or 11.9 gram per ton gold. At $17 per pound lithium carbonate price, which is where it is right now, that's equivalent to 0.65 ounces per ton, or 20.2 grams per ton. What they have just announced is roughly equivalent, if you assume $2,000 gold, equivalent to a 71 million ounce gold deposit. This is close to what the biggest arm waving with Briex's Busang back in 1997 was all about, except this is real. And of course, drop it back to that $10 price where we're down to about a 35 million ounce deposit. And this is what the public doesn't really understand, is that the lithium supply problem. Some think direct lithium extraction will suck it all out of the old abandoned oil field brines in Canada and the United States. Some think the claystone deposits in the United States, Nevada in particular, will deliver the future lithium supply. And some think the salars in the lithium triangle will deliver this new supply. But with these hard rock pegmatites, you can see what's in the ground. It's measured. We know what it takes to get it out. And this is what the car makers want. And the big surprising thing was the news came out Sunday night for the Australian opening. It had a sort of a muted response to it. In Canada, of course, followed through. But at the end of the Monday trading session, this is what I found even more stunning. Albemarle agreed to do a financing in the company of roughly 7.1 million shares at $15.29 Canadian. That was at about a 7% premium to the close on Monday, and that's 109 million Canadian. Now, as of March 31st, Patriot Battery still had about 50 million working capital. So this puts it easily in working capital of 150 million. And there's 24 million warrants that are still out there. They would raise 17 million. About 70% of them expire by the end of the year. So this financing, Albemarle had, done a tentative conditional $5 billion Australian offer to Liontown to acquire its Kathleen Valley. Kathleen Valley is about 156 million tons of measured, indicated, and inferred, which is a little, maybe 20, 25, 30% higher than what PMET just reported for Corvette. But Corvette, they haven't even finished delineating the CV5 zone, which could connect to the CV4 and has extension to the west. So basically, what PMET has delivered is equivalent to Kathleen Valley, which itself does not have the repetition potential that we see in the 50-kilometer Corvette property, but it is 3 to 5 years farther down the road in terms of feasibility demonstration and construction. So, of course, you're not going to see a $5 billion value equivalent for the Corvette at this stage. But for Albemarle stepping up and buying a 4.9% fully diluted stake, this is a huge sign of confidence. This tells us that one of the biggest producers of lithium in the world, which is based in the United States, sees that this James Bay region with the Corvette project is a major part of the lithium supply future. And they have a 9-month exclusive agreement to discuss a potential partnership either in Quebec or in the United States, which would involve constructing a lithium hydroxide refinery to convert spodumene concentrates into the battery-grade material that the car makers require. So this, Albemarle stepping up at this stage, this is a significant development. In terms of night market research, it's short attack. Its resource of about 73 million tons of 1.28%. That shows up when we look at the higher cutoff grades that Patriot Battery provided, and there we in that range of 69 million to 77 million from 1% to 1.1%. The grade shoots to 1.7 to 1.78%. So in the tonnage range that night market research predicted, the grade range is 30 to 40% higher. So all the sort of negativity that had been generated about that the resource is not going to be as good and big as the analysts were calculating with their Leapfrog, help with their Leapfrog software, that has been just totally crushed. That rationale for making the stock go down, it's gone. And we're only going to see the resource increase as they get back in the field and continue to delineate. And this is all open pittable. And And it's only the spodumene mineralization that they included. If there was any lepidolite, these more difficult minerals that are more difficult to process, they ignored this. So I would expect that the only real downside right now continues to be the one thing that was, I think, a legitimate complaint by Night Market Research is that this large group of high net worth retail type investors are sitting on 24 million warrants between sort of 25 cents and 75 cents. So that would raise 17 million at the $15.29 price. That would require something like $350 million worth of buying activity to absorb all that paper if they exercised and sold. But the fact that Albemarle has validated this $15 price and given the company the equivalent of over 150, or allowed the company to have 150 million at Treasury, it will not have to go to Bay Street or Wall Street or whatever they call it in Australia, where their brokerage firms are all located, to raise additional money. So being jerked around by the brokerage sector is not going to be a problem. So, in fact, in my view, the biggest problem will be these warrant holders themselves shorting into the market, hoping the stock drops a couple bucks, buying it back so that they can sort of strip this money out of the market. That right now is the biggest risk with this situation. And of course, because they can short because they are covered by the warrant. If the stock takes off to $20, well, they just exercise the warrant and they maybe left them, $3-4 on the table. That right now is the biggest problem. But as I said, 70% of those warrants evaporate, expire by the end of the year, and then this overhang disappears. But, this is a validation of Lithium Mania 2.0. Canadian investors need to wake up. The Canadian government, both provincial and federal, need to realize that Canada is going to become a major solution to the lithium supply problem for electric vehicles. And we're not seeing yet the money ripple into the other juniors. There's plenty of evidence that there are similar pegmatite deposits in that entire James Bay region. And sometime in the next while here, as we work our way through the summer doldrums and these fire closures, and we're going to see money move into stocks like Brunswick Exploration, which has 1/10 of the valuation of Patriot Battery Metal, and then even the cheaper ones like Dios Exploration, which has 100th of the value, as they start showing evidence that we have something potentially similar to what Patriot Battery Metals has delivered on Monday, July 31st, with its maiden resource estimate.
Why did Solitario do a private placement with Newmont?
I was surprised this morning to see a news release that they had done a financing of 4,166,667 shares at 60 cents US, which was a premium to the market, to raise $2.5 million US. Now that puts their treasury up to $6.1 million US. And why did this happen? Well, the company is still waiting for the U.S. Forest Service to deliver the key document that's needed to see light at the end of the tunnel for the plan of operations drill permit application for the Golden Crest project in South Dakota. And this, I've argued the reason Solitario is a good spec value KRO favorite is that this play, the Golden Crest play, west of the old Homestake District, is really the last frontier for tens of million ounce gold discovery potential. And Newmont, I guess, was already an existing shareholder from the old, I think, Yanacocha days when they sold them some sort of interest related to that, and it decided to go to 9.95%, below 10%. There are some rights that aren't quite clear. It has anti-dilution rights with respect to the sale, financing, and operation of the Golden Crest property assets. And I think what that means is Solitario can't just sell or farm out or do anything with that unless it gives the right of first refusal to Newmont. And it's not clear if they can, if there is another financing to be done, that they get to maintain the 4.9% by participating in it. There are other big parties that are watching this very closely. These companies have signed non-disclosure agreements. The company has a 20-man crew out in the field doing soil sampling. Even though they cannot drill, they are out there collecting on a very dense grid soil sample. There's a lot of bush vegetation covering, and soil's about a couple feet deep, so there is an outcrop everywhere. But by fall, we're going to hear from them a major news release showing the distribution of anomalous gold in an area that has never undergone soil sampling. And this area could end up being perhaps very similar to the Wharf District, where there's 10 million ounces or so already identified. And of course, the Homestake District, where the carbonates that once may have once sat on that got uplifted and eroded away. That was a 70, 80 million ounce Precambrian hosted system. There's also that possibility at depth. But the company decided it would take the money now so that if Treasury doesn't get run down, the winter comes in November. They don't want to drill in winter. This is not yet an advanced discovery play. It's still a early stage exploration play. And the U.S. Forest Service has still not issued a FONSI, which is a finding of no significant impact with regard to their plan of operations application. Once that is done, there is a comment period and more administrative stuff, which will suck up at least 2 months. The company is saying, well, if we don't have this FONSI by the fourth week of August, there probably is no chance that we can do any drilling this year, which means another slump of nothing happening, with people saying, okay, call us next May when you're ready to drill. Now, the other news that came out the past week was that Nexa on the Peruvian project, where Solitario will end up with a 30% carried interest, is initiating a 4,000-meter drill program. This property hasn't been drilled since 2019. They had plans to do a lot more drilling. They've got an application underway to test numerous targets in that whole valley away from the main Florida Canyon deposits, which is about 17 million tons. What they would like to see is a larger potential footprint of tonnage, so that the scale of operation, when they decide to finally go to feasibility study, the existing resource they can deplete in 10 years, but they can see that they will have this as a multi-decade operation, which of course is what the the local stakeholders want to see. They don't want to see just something that's around for 10 years and then disappears. And this drill program could be interesting because it's outside of that footprint on which 530 holes have already been drilled to delineate the resource. The closest is about 500 meters away. These are CRD type deposits. They're small, so drilling away from a target where you don't already have a discovery is risky, but it might be interesting. They might find similar zones within that project, and I think that would be a big help. Eventually, they would spin out the 30% interest into a separate entity so that Nexa can acquire it, but that's probably not going to happen until 2025. And when I talked to Chris Harrell, he said they would like to see Golden Crest turn into a bona fide discovery, not just this surface anomaly where they're finding all this gold, but an actual discovery. And that depends on them being able to drill and show what's happening in the third dimension. We got a couple weeks to cross our fingers and hope that the U.S. Forest Service gets that FONSI statement published. And then, of course, we still have to wait for the comment period to end. That can always generate problems too. But with the FONSI, there's at least hope that there might be a drill program underway in late October that at least gives us some information about what's going on at depth at Golden Crest.
What do you think of the new SEDAR Plus filing system unveiled last week by the Canadian Securities Administrators?
Well, they call it SEDAR Plus, but they really should call it SEDAR Plus ClickAlot. The original SEDAR was launched, I believe, in 1999, and it was a free, publicly available repository for all the regulatory filings that Canadian publicly listed companies need to make. Prior to that, you had to go to the Securities Commission or to a stock exchange and request a physical file to see documents like financial statements, information circulars, and so on. But SEDAR was fantastic because you had one landing page where you had an alphabetical list of A to Z or Z, and you would click something on A, and then there would be a whole list of companies, all the ones that had ever signed up for it. You go down, click it, you get a profile, and then you could click the listings for the filings, and there was the whole list going right back to the company's inception, and you just scroll down. Now, the beauty of this system was that each URL was permanent. So once you got that listing for your favorite company, you just bookmarked it. And you could have your bookmark anywhere, click on it, and it would go in there directly, and you could get the latest filings, financial statements, annual meeting circulars, and quite importantly, the technical reports, which were introduced in the 2000s. And these have been a major boon for people who invest in the resource sector, whether it be the big companies or the little companies, because there is an incredible amount of technical detail in these reports, which the Australian companies aren't really required to do. They do have these very detailed news releases, but they do not have these sort of the high degree of information that's required in a technical report. Under the new system, it's awful, and they haven't even properly completed. First, you got to go to the landing page. Then you've got to key in the name of a company and spell part of the name, see what comes up. Then you got to click on that. This gets you into a profile page, which really has no useful information at all on it. Then you click the documents link, and this displays a randomly ordered list of filings. You know, there'll be one from 2022, then one from 2017, then one from 2023. So you click submit it, a date field, so that it resorts. Well, it very unhelpfully resorts with the oldest filing first. So, you know, if there's hundreds of filings, good luck. So you have to click it again to have a chronologically descending sort. And then, of course, they only display 10 at a time. And some of these filings that these companies make are these certification documents that are of no value to anybody except lawyers. There could be like 10, 20, 30 of them related to some technical report. So then you have to click, because it only displays 10 at a time, you have to click next, 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 until you find what you have. So it's like a complete waste of an investor's time. And they've designed it so that each page that they serve has a unique timestamped URL. You can't bookmark it. If you bookmark it and click it the next day, nothing comes up, no file found. And this is the same model as what SEDI was, the insider trading system was based on. Everybody calls it shitty, not SEDI, because you have to do a whole bunch of clicks just to get to where a company is, and then you get some big long PDF, which most of the time is too long, so it's truncated, so you have to fiddle around and find a date range to try and get everything. An awful, awful system designed by the same Canadian software firm that did the Obamacare website that crashed when it was launched. Probably the same one that did this one. The site is closed. SEDAR Plus ClickAlot is closed on weekends for maintenance. It's only open part of the day, so if you want to do any evening work, forget about it. They have a little message saying that they are swamped with calls. All the existing filers have to figure out how to file their financials and other documents onto it. The whole thing is a nightmare, and it wasn't broken, but they decided to fix it, and I see no added value whatsoever for this, but I do see that this is not a system to use anymore for the public because it is an extraordinary waste of time. In terms of the Canadian Stock Exchange companies, they very helpfully have a page dedicated to each of their listings, in which they also have a list that with links to all of the SEDAR filings. So the Canadian Stock Exchange, Richard Carlton, he's done a good job. He's made it very user-friendly. You can bookmark the CSE companies page and then go there and to get your documents that you want. The TMX group, which runs the TSX and TSX Venture Exchange, they also have a dedicated page for their companies, but they do not have any SEDAR filings on it, so that's pretty much useless. The odd thing is, I think the whole rationale for this was evident in the fact that because SEDAR was based on this, permanent URL basis, they first had a CAPTCHA to make sure that you were a real person and not a web crawling bot scraping all the data out of it. But they also, if you were efficient like me, and was doing a whole bunch of updating and were too efficient at pulling this stuff, they would then pop up a page, find all the rabbits in this picture. Click on that to prove that you're human and not some sort of bot. So there was an entrenched attitude that they did not want investors to efficiently use this repository of regulatory filings. In each filing, the company has to pay money to make. So this is a public good that should be efficiently and freely available to the public. I think it reflects very poorly on the whole mentality that the Canadian regulatory system has towards the investing public. I am very disappointed with SEDAR Plus ClickAlot.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.